Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow. It's an expiry day that's tomorrow, and we have pre-market analysis. We look at what happened in the market during the day today, and then where are we? Are we ready for a better trade plan for the next day? That's an expiry day. And this is analysis for 23rd, Thursday, 2023. So today was definite clear bearish day, no doubt about that. And are we going to hold the current levels, or are we going to further turn bearish and retest? Let's analyze and find an answer to that. So here we have, let's look at the charts for a while, and here we have the weekly charts. We're not interested much on the weekly for now, but definite this is what is happening. We'll just have another look another way, and let's see this. So weekly, this it's a this is the famous trend line, and it's a cup and handle pattern, no doubt about that. It's retracing after a fake breakout. Banknifty also cup and handle retracing, and now let's get into the daily charts, and we have a descending wedge, and we had a small breakout which was kind of again another fake breakout, and it fell so much, like it fell 3.3% on Nifty, and it's nearly 5% from the previous high, which is 42 nearby levels, 42,000 I mean, on the Banknifty, and it's 18,200 nearby levels on the Nifty. So that's a 3% and a 5% fall that has happened. And as per the price action of the lower high and lower low, a new lower high is formed near this is 18,200, and new lower low has to get formed below 17,300 nearby levels. That's what it's heading towards, and you have a 200 moving average support also that's coming there, and all other moving average supports of 50, 20 and 100 is all gone on both the indices, and 200 ADMA is what we'll have to hope for now, while it's descending down the descending downside. Actually the graph has I have put it in better way, descending wedge here, and so that there's some correction there. So that's what is happening, rather than a parallel channel. More looks like a descending wedge, and that's what is happening, right? So here we thought we would be breaking out and making a new swing lower high, but didn't happen. Now it's heading towards making a lower low on both. All the moving average levels are. Let's just summarize the numbers. Like today we lost 273. It's 1.5% down day, and it's wide range bearish candle, Banknifty also 1.67, right? More than 1.5% of index cut, 678 points got in a single day. So it's nearly 2,000 points we lost in just last 5 trading days from the previous high, and it's 600 points gone in Nifty in 5 days. That's the kind of fall that has happened in the last 4-5 days, right? And you have what intraday was kind of trending downside, nothing, gap down and trending down. Banknifty also gap down, trending down, and all the DMA, the exponential moving average supports of it's all gone. Only the 200 is DMA is there right now, and we have also fallen back from that trend line resistance. The weekly we had cup and handle that trend line. We had fallen below that on both indices. We are below it. We're seeing that, and we had a Fibonacci 61 retracement that is also gone. We had it here on both, so both indices lost the Fibonacci 61 retracement. It has breached that, and we'll have to see whether it climbs back and holds that Fibonacci 61 nearby zones or not, right? So anything below the Fibonacci 61 retracement is normally considered bearish when it is in a upside move. But there is also a W pattern that is getting formed. It is forming at the second time. If you club that with the Bollinger Bands, we have volatility divergence possibility. So this is down, up, down, and if it takes a support here, retests inside the bands and then makes an up move, then it can be a big up move that can happen. So you cannot rule out the possibility of a change in polarity as well as a W pattern bounce up that can happen from here. Right, that move will be really big if that happens. But if it makes it lower low and then goes outside, then you that gets negated for the second time and then we have trouble. So the only positive good things is the possibility of a W pattern, CIB bounce, retest from that previous support and then shooting up is what the only hope for them. So if that does not happen, everything is negative as of now. Now 17,772 and 17,800 and 17,825 are the resistance upside. 17,915 and 18,000 resistance after that. Downside, these are the Nifty. 17,500, 17,446, 17,400. These are all the Fibonacci rounding number and previous swing lows and all that. After that, for the downside, 17,353, 17,328. These are all the gap and previous swing low supports after that. Banknifty similarly, 4,500 will be a resistance. After that, 4,800, 41,000 rounding number, 41,100. So all Fibonacci rounding number and previous swing resistance upside. Downside, Banknifty is 40,000, 61 retracement levels could be act as a good support, and 39,420 that is breached. And 39,200, 39,000, all these are swing, previous swing lows and then rounding numbers and all that, which are acting as support for the Banknifty. In all of these levels, the first level that's indicative is maybe valid for the expiry tomorrow, right? And both the bands are actually not expanded completely on the downside, but it's beginning the expansion. As of now, it's sideways. But anytime it expands downside, it's clear confirmation. So it's on the edge. You can say the Bollinger Bands are not turned completely bearish yet, although the beginning of expansion can be seen. So it's still sideways is what bands are indicating, right? So tomorrow is very decisive that tomorrow and day after the end of the week on Friday. Momentum is turned bearish definitely on the short term volatilizes. Trend is definitely crossed over the bearishness and then it's rising up, right? It's a ADX indicator on the other side for the momentum that we're using. VIX is spiked up definitely when such a crash happens, and it's 15.5. We were near the 12.5 kind of level, and it's a big spike of 11% that happened single day. Another day also we expect up equally. So it's kind of 20% kind of VIX up moves and down moves is what is happening since the last 2 weeks since the Adani saga started. So it's features open interest data. If you see, it's a short beta that's happening both, no doubt about that. And open interest data PCR, it's clearly bearish 0.55 and 4% on the Nifty and the Banknifty. Levels, if you look, 17,500 and 18,000, 40,000 and 41,500 on the Banknifty. That's for the February 23rd, the monthly expiry that's happening tomorrow. So it's all bearish on the open interest data, the VIX, and the trend, momentum, and everything, except the Bollinger Bands is yet to turn, but price action, everything is turned bearish. Sector watch, everything is falling down except that FMCG and pharma close red but flat. Others are all big cuts. The IT 1.1%, auto to 1.2%, realty 1.6%, metal 2.6%, metal big cut, all closed red. Momentum wise, if you see metal and pharma and realty, 3 of the sectors are in bearish zones and others are all in the sideways and none of them in the bullish zone set. Heavyweights, if you see, all of them are also heavyweights closed red, and Reliance, Infi, TCS all made 1.5-2% kind of cuts, right? And HDFC also made nearly 2% cut on HDFC Bank and HDFC. So ICICI Bank, Kotak Bank, this seems to be in the bearish zone, but among the heavyweights, all of the heavyweights are managing to in the sideways. Two major heavyweights have already fallen. All the sectors have closed red, all the heavyweights closed red, but 3 sectors are already in the bearish momentum and others are managing the sideways, right? So that's the story, clear bearishness across the sector and across the heavyweights. Institutional selling did not happen much, only small selling of 579, 580 crores of selling has happened. So Fyers was small selling the last 11 days if you see. Fyers have been buying for 4-5 days and then started selling very little. So they're not eager to see. If they would have sold, then we would have crashed and fallen to 16,000, 15,000 kind of levels in the last 1 week long. They are not selling at all, interestingly. Years have been buying, today also they bought. So overall institutional participation is kind of neutral, they're not doing anything. So all the panic may be the reaction to the Adani and Fed speech and Ukraine war, Putin news and all of these and George Soros commentary and all this. This may be creating the sentiments negative, and then the retailers are really selling, and it's not doesn't seem like the institutions are selling that much. Crude oil is kind of flat as of now, still meaning below 76, so it should be fine. The dollar index is rising up. It is a flat as of now. It's bullish momentum. 104.16, and USD/INR rupee is not appreciating at all. USD/INR is climbing 82.8 back to the all-time high nearby levels of 83 plus, which is not that great. And for the Indian markets, gold is rising up and the market is crashing. It has taken a support. It had fallen, and I was consolidating and trying to take out the resistance once again. It has fallen from the cup and handle pattern, channel top. Let's take this flat green as of now. Using as also seen pretty glad to see this market in the US indices, Drawdowns, S&P 500 and Nasdaq and all that tomorrow. We had a big downturn in the US market in the last trading day. 600 points of Dow Jones fall had happened. All of them seems to be falling from a descending wedge like this. On the weekly charts, you will understand better. It's a descending wedge and it is taking resistance. Let's spend 8 to 10 weeks here and then finally giving up. Looks like there is a support zone from the return earlier also bounced up. We'll have to keep a close watch. If it's falling down, then we have a big trouble. That's the same scenario on Nasdaq as in the S&P 500 dollar index and all. Right, it's all the same. So US markets at crucial resistance, all in the reversal mode at support zone. So keep a close watch on if that. There is Fed news, Fed minutes that is coming out tonight at early morning, and there is some job status coming on tomorrow night. So the next 2 days could be having that impact and volatility with respect to that. And that's its topics. Compton Griefs could be a short opportunity because there is a head and shoulder pattern and it is good risk reward. Well, trail volumes are less, and indicators are showing there is bearish and bearishness in the ADX and the RSI both. Long episode is ITC. Had been telling this in the weekly stock picks also. The G sector did not fall today, although it closed flat. Is a good opportunity to rise up. Volumes are good. Rounding pattern, cup and handle pattern, and trend indicators and momentum indicators are bullish. So it's a question as well as the swing up trading opportunities could move further up as per the risk reward that is shown here, right? It could really go. It's a multi-year breakout, and that works out. It's not just swing; it's a portion opportunity as well. So as for the expiry day, how do we trade normally, right? Just have to, if you're taking intraday positions, either you can go on, on option buying or option selling. Whatever you're doing, you have to have a hedge, so that flick trades and all that is not back to you, and you have the hedge advantage, margin advantage as well. But just have to go and sell the put calls and buy calls or make spreads, right? But for OTMs, and then have indicators of like super trend or moving averages or any kind of stock, just to determine that as per your risk appetite, lot position size and have good stop losses and tight stop losses about 45 as well as the chart wise. You can put the use the 5 minutes or 15 minutes if it's in trading, and then always have hedge positions along with you're doing option selling. Either not go down directional triangles and have hedge making it iron fly or iron and condors right in trading, or go for spreads. Vertical spreads, color spreads could if you're not aware of these strategies, check with the videos playlist. You will see option strategies videos are there explaining all of these strategies. So that's the way to play the expiry. We have the theta advantage, but its monthly expiries are very volatile, so you have to be cautious. Levels to watch is 17,400, 7,800 for the Nifty, and 40,000 to 41,000 on Banknifty. Right, so just to wrap up, since we have seen all of this, just to wrap up all the indicators of momentum and trend of Nifty. Bollinger set to expand downside, so it's at a critical zone, a retest zone. It could retest there and then make a W pattern, or it could, that will be really nice. And bridges and makes a lower low, Still could make a doubly pattern bounce, but if it is reached retest, it could continue the bearishness for till the next support zones, right? So, or for that non-full can happen, but not happen tomorrow. Tomorrow it could be just a holding of the 17300 or maximum retest to 17300, and then the Friday will be crucial. This weekly can will be formed, and then we'll get a clarity as to whether what's the plan. By that time, US markets also could be showing indications of falling down the descending wedge or not. So, you have to keep a close watch on all of this. So, market view for tomorrow is moderate bearish, definitely. Levels I already said 17400 to 7800 more, 40,000 to 41,000 Banknifty. Market view is this, and VIX is spiked up to about 50. You have to be cautious. Once about 20, stay out unless you're really portions, at least cut short your portion size. Always have hedge portions, as I say. Use market, be careful and close watch if something is happening, and be extremely cautious. And for the bulls, there is always a possibility that it can retest and stay at the same place and then worse. Because it's a support zone that we have. Right? But as of now, everything indicators and charts are showing clear bearishness for sure. Levels you already discussed, and good luck and happy trading. So if you're not subscribed, please subscribe, and if you want premium services, check out the description of this video, and then if you're watching this and if you're not subscribed, please subscribe and share your reflections, and support us. And thanks for watching. Happy trading. Bye bye.